everyone. Good morning. You're watching Market Fatafat on ET now. I'm Mubina Kapasi. Markets are in the red. However, some sectors seem to be picking up a little, especially the pharma index, which is really managing to gain off the day's high, like I said. But still, we're in the red. The Sensex is down 144 points. Nifty as well is in the red. However, we are holding on to that 11,000 mark. Remember, the big story of today is, of course, with respect to crude and how it will not bode well for India's fundamentals. And that, of course, is an overbearing factor, regardless of the new series of reforms that FM Sitharaman announced on Saturday. So once again, global factors are hampering Sitharaman's efforts, I suppose, to boost market sentiment at this point of time. But the show is, of course, all about flagging of those individual movers and shakers. Today on the technicals, we have with us Mr. SFB, mentor and technical expert. And from our research team, Soumya and Varun join in. So good morning to all of you. And of course, naturally, our top story for today has got to do with crude. More than 9.5 million barrels per day of capacity and 5.7 offline. So naturally, there are going to be big ramifications of that blast that happened in Aramco's facilities. Two of its facilities led to a 13% surge in Brent to beyond $66 per barrel. And of course, usually we do see the biggest impacts coming in on OMCs. BPCL, HPCL, IOC, all of them are the big nifty losers. In fact, earlier in the day, of course, it was imperative that we bring on board one of these OMCs to understand their view on the entire situation, how it will impact the OMC as well. BPCL believed that if oil goes beyond $70 or beyond $80, then it's going to hurt India or OMCs as well for that matter. In fact, listen in to what Mr. N. Vijayagopal of BPCL had to say about the situation that, or rather the event that transpired over the weekend.
While the attack is unfortunate, we don't find any major impact on refining sector or for the oil marketing companies because of two, three reasons. One is because we are not dependent on a certain price of crude. Our profits are basically based on the spread between crude and product prices. Secondly, $70 is a level which we are not very uncomfortable with. And the third is that we don't expect the situation for a prolonged period because alternatives will be found. And we feel that things will be back to normal very soon.
Well, for now, Saudi has said that they are going to try and bring on board 2 million barrels per day online by today. Let's see if that transpires, because like Mr. Vijayagopal said, if it is prolonged, then it can hurt individual companies and the country as a whole. But it's not just OMCs that will be impacted. We're just going to get you a series of other sectors as well that are tanking today in trade. One of them, Soumya, is paints.
Yes, both Asian and Berger Paints, given the fact that their paint company accounts for 55% of raw materials is from crude oil derivatives, and this accounts to close to about 30 to 35% of their overall cost. And this definitely is a major chunk when it comes to the overall cost of the paint companies. And with the oil prices surging, we might see some amount of hit on the profitability and on the margins as well. So it's really imperative for oil prices to come down and for these oil companies to, improve on their profitability and the margin front so that they could deliver good set of results. So as of now, both the companies are taking a hit and are down and under pressure.
Well, yeah, if crude prices rise, you will see a rise in raw material, and that in turn would hit paint companies as well, who may be at this point of time a little circumspect when it comes to passing on the cost because of the current demand environment in India itself. So it's sort of a double whammy for paint companies. And Varun, third sector is, of course, aviation. A big chunk of their raw material cost as well is crude.
Right, Mubina. So for any airline, the majority of the cost which determines profitability comes from power and fuel. So obviously a single largest rally in crude overnight is going to really create a downward impact on the P&Ls for all these airline companies. But also, just keeping in mind the festive and holiday season is coming up, so you should see increased traffic from the airline companies that could possibly mitigate that. We'll have to look out closely to see what the impact is there.
All right, so that of course is the word then on what are the sectors today in trade that are being impacted because of this big news that developed over the weekend. Iran-US tensions are also going to escalate, so the storm in the Middle East will definitely impact the Indian equity markets as well. All right, Mr. Fidai, now let's look at Reliance Industries. Upstream company today down in trade, 1% gone, 12.14. What's your technical recommendation here?
Good morning, Mubina. I believe Reliance is a good bet on dips. You can buy up to 11.90, 11.95 and keep a tight stop loss below 11.80. I believe the stock has the potential to go up to 12.20, which is almost achieved. 12.40 could be the next thing. If it crosses 12.45.50, then we can see even 1300 in extreme short.
Buy call on Reliance Industries. Well, let's move away from the energy pack now and talk about a stock from the FMCG pack. That is Colgate. Over the weekend, we had an announcement that Colgate has got a new MD for itself. Ram Raghavan is in fact the new managing director of Colgate India, and they also did have an analyst meet. Now the takeaways seem to be pretty positive. Credit Suisse has maintained an outperform with a target price of 1450 rupees from here on. They believe that gaining market share, of course, is going to be the key task over the next few years, but that's really been the case over the last few years as well because of the impact of Patanjali. They have a strong pipeline of innovation and renovation as well, which is a key focus. Innovation of naturals, that portfolio as well is very, very important for Colgate. Remember, they do have a product. It's not like they've not done work over there. They do have a product under the naturals and herbal portfolio, which is, of course, picking up, has already picked up steam, in fact, for that matter. Let's see how they do from here on. For now, Colgate is one of the big gainers, 13.11 for the stock. And Soumya, another stock that's really surging is BEL.
Well, yes, this one's buzzing on back of order wins. They've won an order worth over 5,000 crore rupees for Akash missile systems for the Indian Air Force. And on back of this development, we have even Morgan Stanley, who maintaining their overweight stance on the stock with a target price of 116 per share. In fact, they say that such large order wins is definitely giving good earnings visibility as far as Bharat Electronics is concerned, and that's certainly going down well with the stock as well, gaining close to about 1.2%.
Okay, it's off the day's high, I suppose, BEL, but yeah, strong traction there. Of course, the big news maker today, along with energy, is also what's happened in the small finance banking space. You have those new norms, but for Equitas, there is another news piece as well. That's with respect to the SEBI objection. So, Varun, if you could summarize all the news for us that's causing Equitas to tank more than 13%.
Sure, Mubina. So what you have to keep in mind is also Equitas closed last week actually up because there was a dip last week when the news first came out, then it recovered, now it seems to have slid again. Now, basically, they were trying to see if there's another way that they could get this company listed or avoid an IPO via two different schemes. Now, unfortunately for them, SEBI has declined both, and it looks like an IPO is going to be on the cards for Equitas. So obviously, there's going to be a holdco discount. If you follow, other previous cases like this, the holdco discount could be as much as 50%, so that's a downward trigger on the stock. However, you also have to keep in mind the two main criteria here are dividend leakage and capital allocation. So from that sense, Equitas will still own 90% in the bank, and those kind of concerns should be alleviated for investors. So all in all, we'll see how it goes through, but as of now, severely negative impact on the stock.
All right. Well, yeah, that is clearly witnessed, 101 for Equitas. Mr. Fidai, Maruti, another day in the red for this one as the production cuts, of course, steepen. But just before I say that, there's been a sharp pickup in the stock and it's actually recovered completely. And now it's in the green, 0.5% higher. What's your view here?
Well, I believe Maruti has made a very strong bottom at 5,400. And after that, it has kept on making higher top, higher bottom. So technically, that seems to be a very good position to be in. I believe one should buy on dips up to 6,300, 6,350. Keep a tight stop loss below 60 to 60. And people who are holding also can keep that stop loss 60 to 60. If it breaks that, then maybe we'll see some kind of weakness here. But on the upside, we see targets of around 66.40 and 67.45.
Yeah, that's a buy call on Maruti, currently trading at 64.81. Let's move on and talk about another stock in focus, and that's IEX. There has been a bulk deal over here with Akash Prakash's Amansa Holdings buying a meaty chunk in the counter. In fact, precisely speaking, they've bought a little over 1 crore shares. That comes to around 3.6% of the stake in the company. They bought it at 115 rupees. Amansa, remember, has been quite active recently, picking up stake in Sudarshan and Loris Labs, etc. But for IEX, it's just adding on to some of its prestigious set of investors. Pabrai Investments, Small Cap World Fund, West Bridge, all of these are some of the top FI and DI investors in IEX. And now, of course, it has added Amansa as well to the list of big investors in the counter, currently at 120 rupees for IEX. All right, Mr. Fidai, one stock that we are seeing increased pricing action come by in is Jubilant Life. It's another day where we are seeing a strong up move. What's your view here?
Well, I would say it has moved quite strongly, and right now I don't think there should be a fresh buying to be done. People are, already into the stock. They can hold with a trailing stop loss at 495, and they can think of buying around 595.
All right, 2.4% higher for Jubilant Life in trade today. Mr. Fidai is a bit circumspect. Quick look at the RWI small case, see what it's up to currently, with the markets being a little, showing a bit of a downtick in trade. That's the case with the RWI small case as well. It's down by about 0.25%, 524 on the cards. Remember, this is the small case. That's the latest innovation from ET now that represents what the mood for the Indian economy is currently. Okay, we'll take a quick breather right here on the show, but of course not before reminding all our viewers that today on Rise with India Primetime, here's what we have lined up on the Money Show. SEBI is looking at once again tightening debt and liquid mutual fund norms. So how will that impact you, especially if all the securities will have to be marked to market? Also, top fund managers will tell you the best strategies on how you can navigate through all the turmoil. What is going to be the impact of the real estate related announcements that FM Sitaraman has made over the weekend? We are going to be getting a perspective for all our consumers out there. Here's what we have lined up on the Money Show. Quick break. We will come back with more stocks and news. Welcome back. You're watching Market Fatafat on ET. Now let's continue with the countdown very quickly. Varun, we were talking about Equitas. Ujjivan too, however, is of course seeing selling pressure. So what's the news there?
Right, Mabina. So Ujjivan's down around 6% as well today. Now, RBI has recently announced the guidelines for SFBs. Now there's a glimmer of hope for Ujjivan, which is falling, I think, on sympathy woes for Equitas, that after 5 years, any SFB promoter can take an exit. Now, based on a report I've read from a few brokers and Investec specifically, it says that they believe that this norm is targeted at opening up a possibility for merger after 5 years of operation. So, it could be very positive that holdco discount might linger while this new stock is listed, but then once the merger is complete, it will go away. So that's what's happening there.
All right, that's essentially Ujjivan. It's down by about 5.9%. Okay, Soumya, of course, the no production days for auto companies rather, especially in the PV segment, does continue.
Well, yes, and in fact, the latest is from M&M, which is trying to align its production with the sales requirement, and I have been informed that they'll observe no production day for 8 to 17 days in Q2 FY20, and this is particularly 3 more days than observed in the previous quarter for this auto company. And in fact, they also added that they'll observe no production days for 1 to 3 days in farm equipments too. So definitely this is the reason for the stock under pressure today. And in fact, the company also says that they will not see any adverse impact of these production cuts, given the fact that there's an adequate supply of cars in the market right now.
All right, that's M&M. It's now down only 0.5%. It's picked up a bit from the day's low. Let's move on and talk about Bayer Monsanto. Now, these two stocks we don't talk about very often, MNCs in the agro space, but now NCLT has okayed the merger of Monsanto India with Bayer CropScience. Remember that this is something that had taken place about 2 odd years ago, and now, of course, the merger has been okayed by NCLT. Both the stocks are in the green, though mind you, volumes are very low, so be a bit cautious, especially given the fact that this is one of those high-priced stocks. So volumes all the more are low. Both of them are higher by 3 and 2% respectively, Bayer and Monsanto. All right, let's move on. Mr. Fidai, cement stocks seem to be doing very well. Orient, India Cements, all of them are gaining. What's your view on an India Cement?
Well, India Cement has already jumped up almost more than 25% in last few days. And I believe the stock has a little more potential, that is, 4-5 rupees, maybe 4-5% on the upside. It can go up to 90, 91. I would not recommend a buy here. Rather, I would say, somebody who is holding it can book out around 90, 91 and maybe rebuy again on dips. But right now, no fresh buying recommendation on the India Cement.
All right, that's a hold, but no fresh buying. That's what Mr. Fidai is essentially recommending. And Soumya, for Hudco, what's the news? Why is it a stock in news today?
Well, this one's definitely buzzing because they have sanctioned 7,000 crore of loans and also have released loans worth over 5,000 crore during April and August. Well, this is particularly important because the entire NBFC and the housing finance companies have been facing credit squeeze or freeze. That's how I'll put it up, given the fact that there's a lot of liquidity issues, and in fact, the recent announcement by the finance minister were in the same direction in order to keep and give a little support in the liquidity direction. And not just this, they've also received 250 crore rupees in full and final settlement for an old default case, out of which the principal outstanding amount was at 82 crore rupees, and hence we're seeing a smart uptick coming in the stock, which is gaining close to about 4% today.
That it is. It's at 39 rupees for now. Let's talk about PNB Housing. Varun, what's the news over there? What are reports suggesting?
So PNB Housing had been looking to raise some money. Now they've received interest from Goldman, Premji and Munjal. The total investment value should be around 2,000 crores, for which it was actually put out in July. Now this limited preference route allows a maximum of 5 investors. General Atlantic and Carlyle, who are already investors, will also infuse more funds, and this will bolster the balance sheet and enhance lending capacity for PNB Housing.
Okay, it's a little resilient today in trade. Perhaps this news giving it a bit of a boost, 1.6% higher, 645. Okay, let's take a look at Glenmark. Today it's gaining in trade. However, it has come off a tad bit, or mostly actually it stayed over there. But the news is not that positive. We do have the Ankleshwar facility of Glenmark that's been classified as a VAI by the US FDA on its website. Now, VAI stands for Voluntary Action Indicated. It's neutral news, let's put it that way, and OAI is something that's positive. VAI, of course, is as well something that one must keep a note of. It's the Ankleshwar facility, an important facility for Glenmark Pharma. Stock is higher by 2%, just inched here and there, of course, from that level of around 380 rupees. Not much of volatility seen today in the stock. But one stock that's seeing a lot of volatility from the pharma and hospitality space is Wockhardt. Mr. Fidai, it's another day where we are seeing a massive surge come by in the stock. What are you making of this move?
Well, I believe the stock has almost reached its near-term potential. I would not recommend a buy. Rather, people are already into the stock. They may start booking profits around here between 380 and 350, and I believe the stock has moved up quite strongly, so needs to pull down a little bit. Maybe if they can rebuy around 270 to 280.
All right, but on that note, we are completely out of time on this edition of Market Fatafat. So Soumya, Varun and Mr. Fidai, thank you for joining us and sharing with us your views on individual stocks. We'll wrap it up. Coming up next is Market Fatafat.